In this session, we are going to discuss fixed assets module. Prior to this module, the industry was facing the problems like misuse of assets, difficulty in maintaining the record of assets, which are there in various locations, difficulty in calculating depreciation as different assets may be having different depreciation rates, unable to calculate the depreciation based on usage, lot of problems to record the asset usage details. When asset is transferred from one location to another location, it was difficult to keep track of those assets. Unable to integrate fixed assets details with financial accounting module. When an AMC is given for any asset maintenance, it is difficult to track AMC expiry date. When any repairs occurred or an asset value is changed, difficult to update those details. When an asset is disposed, they were facing difficulty to update. While with Focus Fixed Assets module, there is no misuse of assets. Location-wise asset details are available on your fingertips. Depreciation will be calculated automatically as per the method defined and as per the rate specified for the asset. The available depreciation methods are WDV diminishing value, WDV diminishing value calculated half yearly based on usage, charge off, straight line. The depreciation is calculated not only as per the company norms but also as per the IT rates. Depreciation will be calculated as per the usage also. For example, for a vehicle, depreciation can be calculated basing on kilometers. For any machinery, depreciation can be calculated basing on hours used or on production runs or basing on the quantity produced. All the usage related info can be recorded. It's very easy to keep track of details even after transfer of assets. Automatically, the depreciation will be posted into the financial accounting module. A report is available to track AMC expiry date, repairs or change in asset value will be updated, auto update on disposal of any asset. Let us assume we have the following fixed assets. One is machinery, which is located in Hyderabad. Another is car, which is located in Bangalore. The method we are using for machinery is WDV diminishing value, and for car we are using based on usage. For the machinery, the percentage is 8% and for the car it is 2 rupees per kilometer. And as per income tax, the percentage for machinery is 10% and for car is also 10%. First of all, we have to create the fixed asset locations. As we have to select these locations at the time of asset creation. As per our assumption, we require two locations. One is Bangalore, another is Hyderabad. Here we are using the tag 1 for locations. Company create masters location. Locations are created. Now create required accounts. While creating assets, we have to select these accounts so that the depreciation can be posted to the selected accounts. The required 4 accounts are to be created. One is depreciation. For the depreciation account, the type will be income and expenses. Another is accumulated depreciation. For this, the type will be assets and liabilities. Another is fixed asset account. The type will be fixed assets. Fourth one is asset gain or loss account. For this, the type will be income and expenses. Now let us create a new asset. For that, we are using fixed assets tree. All the existing assets will be displayed. By using add, we can create a new asset. If you want to use the details of any existing asset, then copy details from is used. So I want the details of melting machine to my new machine. When I click on load, the whole details of melting machine will be loaded. Just change the name. All the information is loaded from this existing asset. Not necessary to enter the whole information once again. My machine is created. Let us create one more machine, new machine. The code for this machine, alias parent asset. These are all existing assets. Sometimes we buy a new part to the machinery. A part can be an asset while parent asset will be the machinery. These are all existing assets. Select parent asset from the existing assets. Asset type, which type of asset is this one? These are all provided by default. So for this we have to select the type. Location, so these are the locations just now we have created. So as per our assumption, Bangalore is our location. So vendor, we are getting the details here from accounts master. Vendor A, on which date we bought the asset, what was the cost, how many numbers we bought. If we select two numbers and check this option, create a different fixed asset for each quantity, then what happens? Create two assets. Automatically system will create two assets. Two assets are created. New machine 1 and another is new machine 2. So next is cumulative depreciation. If we have bought the machinery in the year 2009, the previous year depreciation will be the cumulative depreciation that we are entering here. For example, 8% on 2 lakhs will be 16,000. So that we are recording here. Just click on OK. You will find those details in depreciation schedule. So new machine 1, 2 lakhs is my original value. Depreciation brought forward 16,000. Current asset value is 1,84,000. This is the depreciation brought forward which we have entered in place of cumulative depreciation. Next, insured value, on which amount the insurance has been made. Scrap value. Then IT depreciation rate. As per the income tax department, how much percentage we can depreciate, that we are entering here. So as per the income tax, previous year depreciation amount must be entered here. Even we can attach a photo by simply clicking on this. Select the asset photo, then click on open. The photo will be displayed here. To remove the image, right click here and then click on remove the current image. Next, in depreciation details, next is select the method. For machinery, as per the assumption, we have selected WDV diminishing value. So percentage of depreciation 8, date of commencement from 1st April 2010. Then accounting links, just now we created some accounts. Those accounts are to be selected here. Asset, machine asset, accumulated depreciation account, depreciation P&L account, asset gain or loss account. Depreciation entry will be posted automatically to these accounts. Let us create one more asset, Honda City car. Type of asset is vehicle. Location Hyderabad. Vendor. For this, we are selecting the depreciation method as based on usage, unit of usage, so kilometer. As per our assumption, we want to depreciate 2 rupees per kilometer. As per IT, the percentage is 10%. All the created assets will appear in the fixed assets report. Select the assets. The details which we have entered in a fixed asset tree, those details will appear here. Asset name, code, type, alias, location of the asset, vendor, purchase date, quantity, rate, original value, depreciation method, status, fixed asset account, depreciation P&L account, all the information will appear. To view the depreciation details, depreciation schedule is used. Here, let us assume we want to view the depreciation for only a single asset for new machine 2. Then, basing on the percentage we have defined at the time of asset creation, the depreciation will be calculated automatically. The depreciation amount will appear here, 16,000, 2 lakhs minus 16,000 equal to 1,84,000 is the closing value. This 8% we have defined at the time of asset creation. In place of rate of depreciation. For Honda City car, while creating a asset, we have given the depreciation per kilometer as 2 rupees. Now we have to enter the usage details. To enter the usage details, we are using assets usage. Enter the date. Select the asset. Let us assume in the month of April, the car went around 500 kilometers. So the new reading will be the 500. Click on update. Now the depreciation will be calculated for this 500 kilometers. We can view in a depreciation schedule. The depreciation amount is 1000 rupees. That is for 500 kilometers per kilometer 2 rupees. It comes to 1000 rupees. Now the closing value is 5,99,000. Just now we entered the assets usage. There is one report which will display the information regarding asset usage. Whatever we record here in assets usage, that will appear in a report assets usage. When an asset is transferred from one location to another location, then we use this transfer of assets. Let us assume Honda City car, earlier it was in Hyderabad location, now assume it is transferred to Chennai. So that can be entered through this screen. Applicable from which date? Just click on OK. To view the transfer of asset details, the report is available. Transfer of assets. Select the asset. Date, transfer number, new date, asset from location and to location. If the maintenance is given to other person, then to record those details, maintenance is used. Asset code, select the asset, assume new machine from 1st April 2010 to 31st March 2011. We have given this maintenance to vendor A for 1 unit, rate 10,000 as a AMC amount. Even a contract document can be attached by clicking on this browse. The details which we have entered in maintenance, those details will appear here. Maintenance of assets, date of expiry, the whole information will be available. To record any repairs, we have this option. On 27th September for a asset Honda City car, new AC is added. Expiry date must be greater than today's date. The information which we have recorded in repairs will be available in repairs of assets report. Whatever we have recorded over there, that will appear in the form of report. If any change in value for any asset can be recorded through this change asset value. We have an asset called building. Earlier the cost of the building is 10 lakhs. Now the value is increased to 15 lakhs. This kind of entries can be recorded through change asset value. Select the asset from which date the new value is applicable. Add value, save. Now for the building, the new value will be 15 lakhs. In a depreciation schedule, by default it will display the depreciation amount as per the company norms. If we want to view the depreciation as per income tax, then check this option, calculate depreciation for income tax. As per income tax, it is showing 20,000, that is 10% on 2 lakhs. If we want to view as per our company norms, then don't check this option, calculate depreciation for IT. So it is 16,000, that is 8%. To post the depreciation entries into the accounts, this option is used, post depreciation entries. Automatically, a entry will be posted into the accounts. Check this option, consolidated posting. To view the posted entries, we are using credit notes. So this is the entry for Honda City car, 1000 rupees. Like this, the entries will be posted. When a asset is sold, at that time to record the entry, we are using disposal of assets. On which date, price, depreciation 1000 rupees. Actually, we can sell this asset on 5,99,000. Due to some reasons, we sold it on 5,90,000. Here 9,000 loss is occurred, post a JV. Select the customer name. Now you will find automatically a entry will be posted into the journal voucher. This is the entry posted where customer account 5,90,000 is debited, 1,000 rupees is transferred to accumulated depreciation, 6 lakhs asset account is credited, and 9,000 loss occurred is transferred to asset gain or loss account. These accounts we have defined at the time of asset creation. The entry is posted automatically to these accounts. To view the disposal related report, we are using this disposal of assets. Select the asset. Asset name, date, disposal number, purchase price, quantity sold, depreciation amount, value sold, etc. One more method for depreciation is straight line method. If we select straight line, you will find write off in years. So here we have to enter the number of years, in how many years the asset must be written off. That we are entering in this field. For WDV, you will find rate of depreciation, we are entering percentage, while for straight line, we are entering number of years. One more setting in preferences is, in masters you will find always define depreciation rate as percentage. Earlier for straight line method we will be getting a option called written off in years. Now we won't get that option written off in years. For straight line method also we will be getting the same rate of depreciation. Now the user will not be able to enter the write-off in years, that is number of years he will not be able to enter. Only the percentage they have to enter for even straight line method. While if we uncheck this option, always define depreciation rate as percentage, now they will be able to enter the number of years for straight line method.